Welcome everybody to our last analyst call in 2024. And today, obviously, as the title already says, today we're going to speak a bit about the market outlook for 2025. So this is on the back of our next State of Crypto, which will be released next Monday. But we thought we're going to have an analyst call prior where we talk about a few of those predictions. And obviously, by the end of the session, feel free to ask questions. Also, if you have any kind of like bold predictions, feel free to shoot them to us and we're happy to discuss them. And with that being said, let's jump in. So first of all, what I want to talk about is on the right side, you see the new cover. As you can see, there's always a lot of work that goes into just creating the cover from a design perspective. So obviously, we want to thank the design team, as you can see here. I hope you spot the little details. There are some hints on what the topics could be, and therefore, thank you very much to the design team as well. Good, let's jump in. First of all, in this new State of Crypto, we actually have 12 predictions. When we started writing, we had 10 bold predictions for next year, but then we found so many exciting things happening in the space. That's why we included 2 bonus predictions as well. So obviously today we only have like 30 minutes of this analyst call. Therefore, we don't have time to talk about everything. And we also want to make sure you download the new State of Crypto. But I think we're going to go through some of the 5 of the predictions that we have for 2025. So maybe let's jump in with the very first one. And again, keep in mind, we started writing this in September or October. This is a really hot topic because it's even more relevant now. So Lina, maybe you can just guide us through this first prediction here.
Our first prediction is that another nation state is going to embrace Bitcoin as a strategic reserve asset in 2025, with all this talk about Bitcoin in the presidential elections in the US. And even before the year ends, we find politicians in Brazil, Canada, and even Poland talking about holding Bitcoin as a strategic reserve asset to help their economies. This is really not a far-fetched prediction. And maybe it's not even one nation state, maybe there will be 5. Let's see how the dynamics shifted over the past year. In this chart, Bitcoin has demonstrated a great growth potential, sidetracked by a high volatility is in comparison to gold. For example, if you can see here, the Bitcoin is the orange line, gold is the yellow line. We can see that it demonstrated a really great growth potential for holding Bitcoin as opposed to holding gold, even though gold is still the traditional hedge against currency debasement and inflation. However, that dynamic shifted. And there was some macro factors and geopolitical tensions that caused some short-term drawback. However, we've also seen that these drawbacks coincide with accumulation from long-term Bitcoin holders. Long-term Bitcoin holders are Bitcoin holders that have idle Bitcoin in their wallets for at least 155 days, so unmoved Bitcoin. So these guys have been accumulating, especially in market turbulences, and that we can see that clear shift in dynamic in August, in the beginning of August, when we saw that the Japanese central bank basically hiked interest rates, shocking markets. However, living in another world, long-term Bitcoin holders found it a trigger to buy more. So that essentially demonstrates the growth in institutional adoption and a shift in how holders or investors think about Bitcoin as a store of value and even as a reserve asset for institutions and nations alike. That is a great trend, and that we think will continue in 2025 as it demonstrates institutional interest, basically, coinciding with ETFs that launched earlier this year and with also a favorable regulatory environment, especially in the US in 2025. When compare it to gold, maybe if you guys are new here, we tend to often compare Bitcoin to gold due to the commonality in terms of the nature and scarcity. However, what Bit has so many factors that differentiate or make it a much more convenient investment other than gold. One being a tradable 24/7, having a decentralized monetary system with a hard-coded monetary supply cap, with a predictable monetary system, with the difficulty or mining difficulty increasing, making the outcome of this long-term scarcity predictable. We can see clearly here how the market dynamic is shifting. We can see that gold is still at an all-time, yes, it is trading at an all-time high, just like Bitcoin. Moderately, of course, the volatility cannot compare. However, we can see that there is a trend line, a very clear trend line here. In terms of nation state, as I said, we are already seeing so many countries already discussing it. And we have our eyes on some nation states that we are not going to disclose here. But the future is very promising for this asset. We've seen El Salvador, of course, pioneering on that front. Everyone called them crazy. But then we've seen Bhutan also quietly mining Bitcoin, a very tiny, very wealthy country or nation state, already accruing revenue on that front. We've seen other states as well take U-turn stances in favor of Bitcoin mining, just to basically solidify their economic strategies, hedging against their currency debasement in light of the many geopolitical conflicts happening around the world, with, for example, South Korea, with the martial law. I think Argentina, namely, will follow suit with a new leadership. And last year is discussing with the El Salvador president, consulting with how they can utilize Bitcoin as a store of value and also as a strategic reserve asset for their country. As you guys know, Argentina has been infamously stuck in a rut with their inflation and currency debasement. Bitcoin comes in very handy for countries like that.
What do you guys think about the US? Obviously, it's a hot topic in the United States. Do you think they will follow suit in 2025? Will it take a bit longer? Will they be the first? What's your guys' opinion here?
I was just saying, it seems like we're on the road to that. Like a lot of Trump's campaign promises so far regarding crypto, he's followed through. He's not president yet, but it seems like he will be following through with them. And the strategic Bitcoin reserve seems like one that he definitely is possibly hinting at. And then on top of that, we're seeing countries like Brazil start releasing legislation to adopt a Bitcoin reserve, as well as the mayor of Vancouver, which is one of the largest cities in Canada, also put in a proposal to do the same. So I think stuff like that might push the Trump administration to go on and release, officiate the U.S. Bitcoin reserve. So I think we might see that in the U.S. in 2025.
All right, yeah.
I think what's even more interesting is his pick for the Treasury Secretary, 𝕋𝕚𝕞𝕖. 𝕋𝕚𝕞𝕖 owns the company that holds Tether's treasury assets, and he acquired a stake in them. But what's even more interesting is that he is officially exploring Bitcoin-backed loans. I think that's what makes it even more interesting, that despite the fact that it might not be super practical to buy new Bitcoin because of the size of the US economy from the market. Of course, this can be done via OTC and via other methods that wouldn't materialistically impact the market. It's the fact that Bitcoin is becoming more and more normalized and standardized, that it can be used in lots of other alternative ways within the US economy. And that's what's really interesting. And it ties back also to the point that you just mentioned, Adrian, about the game theory, that it will encourage and incentivize other countries to start looking into this more seriously, because no one wants to be left behind. Just like when gold was adopted as the standard back in the day, and then countries followed through, we are expecting to see the similar kind of behavior to play out here. And that's what's really exciting.
No, I agree. I think the basic... The pathway seems to be there. Obviously, as you said, we have a pro-crypto treasurer. We have pro-crypto politicians in majority in the House and the Senate, a pro-crypto government. So overall, it seems like the foundation is here for a potential strategic reserve asset in the US as well.
And in the bear case, if it doesn't get ratified as a strategic reserve asset in the US, for example, it still counts as a leap forward in adoption in terms of utilizing Bitcoin as a financial asset and rather than a speculative asset. This is really good for Bitcoin, even if these promises do not materialize in 2025.
Yeah, I'll just say that Howard Lutnick is the Secretary of Commerce, and he's the one who is the CEO of Counter Fitzgerald, the bank that owns the U.S. Treasury, that owns
Tether.
treasuries that manages them, and then Scott Preston, who was a hedge fund manager. He's the Secretary of Treasury, and he's also very pro crypto. So I just wanted to make that point.
I just wanted to add, just to also take a step back. I think some people in the audience might be wondering, yeah, Bitcoin and gold have similar properties. So does it make sense actually to have both? Is it one or the other, or can you have both? And therefore, does it make sense to have Bitcoin as a strategic reserve as well? And I think part of the answer comes from the fact that Bitcoin does have these similar properties, but B is the fact that the return profile for Bitcoin, when comparing to gold, is actually quite different in terms of directional movement. So if you look at the correlation between Bitcoin and gold over the last 4 years on a monthly rolling basis, it's actually 13.13, so 13%, which is fairly low. And the reason for this is because I think Bitcoin is still regarded as both a risk-on and a risk-off asset. So in moments of geopolitical tension and macroeconomic uncertainty, you have gold being bought into at first, whereas some people tend to sell off Bitcoin because it's still regarded as a risk-on. But if you look at the returns over a medium term in response to this geopolitical tension, people buy into Bitcoin as they realize the benefit of a kind of censorship-resistant asset. And so you have that directional movement is opposite in response. So both
very complementary, basically. So in that, from a return profile, they complement each other, and therefore no excuse to adopt it as a strategic reserve asset.
Exactly. And
awesome.
It's why we love the term bold, which is combining Bitcoin and gold. I don't mean that I'm bald, that as well, but.
Awesome. Let's move on to the next one. The big thing is, obviously, we all talk about Bitcoin as a store of value, as kind of like a digital gold. But we believe there's a big part that is being overlooked. And that kind of leads us to our second prediction. And yeah, maybe Kareem, you want to enlighten us?
Yes, absolutely. So yeah, as Adrian just mentioned, Bitcoin was always being thought of as a store of value, but there's really so much more that you can do with the network and with the asset itself now. Bitcoin is becoming more and more like a software as a service. It's becoming more like a programmable blockchain, and that's quite exciting to see because since the network's inception, Bitcoin was always limited because of its programming language. It was always limited in what it can do. It doesn't have any programmable functions. It can only serve or support simple payment transactions. But this is now changing with the new generation of scaling solutions that have been coming to the market quite recently. But more importantly, the reason why this became relevant over the last year is that we saw, for people who haven't been around for quite some time, Ethereum, at its very early days, it had an application called CryptoKitties, which is, for lack of better purposes, it was a bunch of digital cats that you were nurturing as a fun and an entertaining game. But this really pushed the limits of what can be done on Ethereum because the transaction fees soared to more than $100, and the network was super slow. And we saw a very similar experiment last year. We saw that suddenly people were experimenting with new standards, things that were called either runes or were called ordinals. To simplify, you were able to trade tokens and you were able to trade NFTs not directly on top of Bitcoin. Of course, these are experimental standards. They're not officiated yet by the community, but they were a new way to see what else can be done. This resulted in the transaction fees of Bitcoin going to more than $150 and $200 at a certain point, and it really clogged the blockchain. This was happening all throughout last year. So this really catalyzed and reignited the interest in developing a new landscape of scaling solutions that you guys can see here in front of you. And as you can see from March of 23, this was the peak of the network congestion that the blockchain started experiencing. And from that point forward, we can see that this activity started surging bit by bit until really it kicked off this year. We don't have the time to get into what all of these scaling solutions are, but for lack of, or to simplify, just like Ethereum had its moment in 2020 with a plurality of scaling solutions that now are outpacing what Ethereum can actually do, like most of the activity on Ethereum is happening on its layer twos or on its scaling solutions. We're seeing the same experience here happen on top of Bitcoin. The first and foremost, or the legacy scaling solution is called Stacks. For people who have been joining us in the previous analyst calls, we've talked about it quite a lot. It's the oldest and the most battle-tested one. It just had its new upgrade a few weeks ago, and it essentially, the scaling solution is now much more aligned with Bitcoin in the sense that whatever transaction that happens on top of Stacks, it's backed by the security of Bitcoin. And also because Bitcoin has a really long block time of 10 minutes, meaning that you have to wait at least 10 minutes before a transaction is finalized. With Stacks, this is now down to 10 seconds. So it's almost a 99% reduction. And this is really incredible to see. As I was saying, there's an explosion of other scaling solutions that are emerging on the market right now. This is, by the way, not all of them, but just to give you a glimpse of how much the rate of progression has materialized. We finished this report, or we finished the writing of this report almost a month ago, and we saw that the TVL was up to almost 1.7 billion. Right now, the total TVL on top of Bitcoin has reached $3.3 billion. So we've seen almost close to 70% increase in TVL in less than 2 months. So that should give you an idea about this is going to be the new frontier for development and for experimentation that isn't really well known in traditional finance and then the traditional and the TradFi space. But this is definitely something that is happening here in crypto, and we always try to keep you guys ahead of the curve. So this is something that you should definitely keep your eyes on.
Amazing. No, I agree. More innovation happening on Bitcoin, and AUM, or total value locked, of 10 billion at least. That's what we expect for 2025.
We think it will actually exceed, considering how much has changed in the last 2 months, and we would be super happy to see that. But yeah, that's the bare minimum that we think the AUM will reach, definitely.
100%.
All right.
We already have side chains too, like the liquid network of 1.8 billion of TVLs. Yeah, it's definitely gonna happen.
Yeah. All right, let's move to our problem child. We spoke a lot about Bitcoin, but we had one lagging asset when we look at price, and obviously that's been Ethereum. So obviously we had to come out and think about what's going to happen with Ethereum 2025, given that it's been lagging behind. Maybe Matt, what is our prediction for next year?
So our prediction is that, so we've seen revenue on Ethereum, or fees generated on Ethereum, hit some pretty local lows, some low levels we haven't seen in a while. And I guess even before I get into that point, I just want to bring up that although Ethereum has lagged in price, as of recent, it's actually climbing. And right now we just broke the critical $3,800 level. We broke that a couple of minutes ago. So even though it's been lagging, we've seen Ethereum really catch up since the election. And who knows, maybe it may not be our problem child going forward. And that kind of ties into our prediction too. Going into that, we've seen these layer one networks, these L1 networks like Solana, Sui, Aptos, and so on, still one TV as well as users from Ethereum mainnet. So that's one reason why we've seen fees in Ethereum drop, which we can see here since the beginning of this year, which co-aligns with Solana gaining huge major traction, and then as well as alt layer ones like Sui, as I mentioned, gaining huge major traction. We see a drop in Ethereum's revenue or fees. And then on top of that, there's a second issue, which is the Ethereum Foundation chose to scale Ethereum through a layer 2 scaling solution. And Kareem spoke about layer 2s earlier and what they are. So because of this, a lot of users have moved from Ethereum mainnet, which is the Ethereum, the layer 1, to these layer 2 networks that are built on top of Ethereum. And because of that, Ethereum isn't generating as many fees. And this really became a problem in the beginning of this year when Ethereum went through something called EIP 4844, which essentially is an upgrade to the network, which makes it cheaper to transact on these layer 2 networks through the introduction of something called blob space, which is basically just like a temporary status solution. And because of that, more people are transacting on these layer 2 networks now that they're cheap, comparable to prices on alt layer 1s like Solana and Sui and so on. And the way it works is that these layer 2 networks, they pay a fee back to Ethereum, but the fee isn't so high. And because of that, since people are using that instead of the layer 1, the fees have dropped down on layer 1 significantly. And it may not seem like the future is looking bright for Ethereum, but that's not the case, because although these layer 1s, these alt layer 2s are stealing fees and uses from Ethereum's mainnet, they're actually contributing to the entirety of the Ethereum ecosystem. And they're doing that by bringing more and more users onto Ethereum. And we're seeing that, right? We see layer 2s like Optimism, Arbitrum, and Coinbase's layer 2 network base bring a ton of users. This year alone, Coinbase's layer 2 network has generated about $90 million in revenue and has a TVL of about 4 billion, which is huge. That makes it like the 6th or 5th largest network in terms of TVL. So this is driving in more and more users who would not be using Ethereum. They may be using networks like Solana or Sui, but now it's driving them back to the Ethereum network. And then on top of that, if we do want to onboard the next 100 million people onto crypto, which I'm sure we are going to do, we need these cheap and easy to use layer 2 networks and such. And so Coinbase's base has done a very good job of that. As we onboard more and more users, the fees paid back to Ethereum will get higher and higher. And then on top of that, there's this thing I mentioned, blob space. There are some critical levels of demand in blob space. And that's one thing that we touch on in State of Crypto, is that we're actually, we wrote this again in September. We made a prediction that we would reach those critical levels, and we are now actually reaching those critical levels. And since we've reached those levels, we've seen the price of Ethereum actually spike, corresponding to the time of us reaching those critical levels. So you can read more on that on our State of Crypto, but that's another prediction that we made that has actually came true before we released the report, unfortunately. But it just shows that these layer 2s are doing what they are doing. They're driving a lot of users on these layer 2s, which is driving fees paid back to layer 1. And as blob space demand reaches above 100%, the fees generated by layer 1 are going to be even higher and higher. So we are seeing that. And then on top of that, you have a lot of alt layer 1s that are now becoming layer 2 networks on Ethereum. We're seeing this with Celo and Sonic or �々. So that's another thing that's going to drive more users. And then we're seeing some TradFi companies or some Web 2 companies like Sony release their own layer 2 network. So Sony announced in August their Sonium layer 2 network. And that's also just going to drive more users to Ethereum layer 2s, which in turn would drive more revenue to Ethereum in general. And so we might see different companies like Robinhood and Visa also adopt these layer 2 networks. And again, just driving more and more users onto Ethereum. As that happens, the fees are just going to go up and up. And we predict that we're going to return to levels that we had previously seen in 2020, 2021.
Yeah, no, that's absolutely correct. We do predict that we will see a comeback of Ethereum in 2025. Transaction fees went down, but transaction volume will increase. And as Matthew said perfectly, we expect like more traditional companies building on top of Ethereum, especially launching their own scalability solutions. Yeah, that was really frustrating here again. When we wrote it, we got the news from Kraken, for instance. They are launching their own layer 2, but we expect we'll see more. We expect someone like Robinhood or Revolut or Visa to launch their layer 2 on top of Ethereum and are actually helping grow the entire ecosystem.
Just something else to really highlight here at Base, specifically Coinbase's network, their transaction throughput, they reached almost 115 transactions per second over the past 2 weeks. This is almost 35x the capacity or the transactional throughput of Ethereum. So the reason why other companies back in the day opted to build their own blockchain was to reach this kind of throughput and reach this kind of impressive performance. This is now doable on top of Ethereum. So this will encourage more people to build on top, again, build their own networks on top of Ethereum. And for certain other companies or for certain other businesses, they will want to use Ethereum for its high security guarantees and decentralization, because they do not want to launch on something that isn't quite as battle tested or isn't as quite as secure as Ethereum is.
Very good point. Security is the most important thing. Is the user experience good on Ethereum compared to other platforms? Absolutely not. But it is the most secure, most battle-tested layer one, absolutely. And that's why you see all those companies and asset manager preferably launching on Ethereum. And we'll continue to see that in 2025. Let's move on to the next one, to number 4 here. We talked about the problem child of 2024. Now let's talk about one of the winners of 2024 and what it means for next year. So Max, hit it home with Solana.
Yeah, sure. As you said, from problem child to golden child, I would say. And this year, yeah, Solana has really cemented itself as a key player in the crypto space, and particularly as a significant competitor to Ethereum, gaining significant market share over its big brother. So you can see on the chart over here, it may not be our most exciting chart, but it still shows you the kind of progression of Ethereum versus Solana's market share. And here, I think the main thing to point out is the year that Solana's had. It recently reached a new all-time high, actually. It's significantly, the SOL to ETH ratio has also been significantly strengthening all year. And that just doubles down on Solana's growth relative to Ethereum as well. In terms of flows, we've seen over $3 billion being directly transferred from Ethereum to Solana. So that shows you the clear shift in market preference. And as a whole, Solana experienced $2 billion in net inflows, whereas Ethereum suffered $7 billion in outflows. And I think the shift, the preference shift here is driven by its nature, Solana's nature as a highly scalable and performant chain. So just to put into perspective, the whole year, Solana has had an average of around 2,400 transactions per second. And these are all processed at a very cheap cost of just 8% of a cent, just to really compare it to Ethereum's relative expenses. I think this is particularly important because we've seen on-chain activity surge significantly on the Solana blockchain, and it still remains a very cheap blockchain to interact with. And as a result of these kind of technical advantages, Solana has become the platform of choice for retail throughout the year. We saw this in the earlier part of the year in March, when Solana-based SPL tokens, when they went on their first craze. In that month, we saw Solana-based DEXs process 60 billion in trading volume, which significantly surpassed Ethereum's Uniswap. And actually, we saw another resurgence of this following Donald Trump's victory, where Solana recorded 130 billion in volume in the month of November, which was double Ethereum's. And as a result of all this activity, impressively, Solana now holds 50% of the top generating applications. So that's just to put it into a year in review for Solana, but we also expect this to continue throughout next year. So that's our prediction, that we expect Solana to continue biting and eating into Ethereum's market share while reaching a new all-time high in TVL. And the reason for this is driven by the improved UX. So Matt mentioned it in the previous slide as well, but the next wave of crypto users will necessitate improved user experience to be onboarded in the on-chain ecosystem. They really want and seek an experience that for them is comparable to their existing one in Web 2. And we, of course, are not seeing this only with Solana, also with other lean layer ones, like Sui and Ton, but the same is true for Solana. They are a lot more friendly to use than it is on Ethereum. Not only this, but Solana is also poised to continue accelerating their TradFi integrations. We saw the early innings of this throughout the year. PayPal, they launched their stablecoin on the Solana blockchain, and it's processed nearly 20 billion in transactions since May. And they've also announced and made some partnerships with Visa, Shopify, Stripe. So this is further establishing Solana as a potential leader in crypto payments. Again, we expect this to continue throughout next year. There were a couple of announcements at Solana Break, for instance, that Franklin Templeton is launching their on-chain government money market fund on the Solana blockchain. Société Générale is also expanding their stablecoin to be supported on Solana. And so there's just a number of kind of TradFi integrations that are taking place. That being said, of course, given Ethereum's security and decentralization, it still remains the favored choice, but it's still very positive for Solana to see that traditional companies are experimenting with their chain. That being said, and I know some of you in the audience probably thinking this as well, to actually be able to adequately support these new integrations, Solana will need to resolve its ongoing technical issues, which often include network outages and transaction failures. And so I think a key part of the solution is the FireDancer validator client, which is set to go live next year and demonstrated over 1 million transactions per second on testnet. And not only will this enhance Solana's speed and cost for transacting on the chain, but it's also diversifying its validator ecosystem, which makes it more robust to potential outages. A number of things are going on with the Solana blockchain, but we do expect all of these things to come to fruition next year, and it may also coincide with the potential regulatory easing. And then who knows, it may pave also the path to some potential traditional financial products on this crypto asset.
No, we all agree Solana, especially going into a bull market and Solana being that cheap and user-friendly, retail investors will be onboarded through Solana. And obviously that will drive TVL, that will drive price, and therefore it will continue to eat into Ethereum's market share, especially in the short term. All right, let's go to our last prediction for today, obviously. We also wanted to highlight one of the most exciting subsectors, and this is going to be decentralized finance. DeFi has been around for many years now. The crypto market goes through cycles, through a lot of ups and downs, a lot of ice cold bear markets, but very euphoric highs as well. However, DeFi has always been there. Like DeFi has always been working. DeFi has been chugging along. It's really one of the most robust subsectors of crypto and one of the most important ones. The only problem it always had is the tokens. So you might have heard about decentralized exchanges like Uniswap or lending and borrowing protocols like Aave. Why the technology is amazing. The token, it was hard to make an investment case because all they're governance tokens, which means you receive voting rights. They yield you a right to vote on any changes to the protocol. However, there was no value accrual, no yield whatsoever. But we think this is going to change in 2025. Giving the potential regulatory clarity in the US and in other jurisdictions, we believe that a lot of these protocols, they will remodel some of their token economics to make them more attractive. The best example would be something like a fee switch. If we take a decentralized exchange as an example, if you hold the token, let's take Uni as an example, you don't accrue any value. However, with a fee switch, all the transactions that are being generated on top of that application, some of that will yield back to the token holders. And that's obviously big, because now the governance tokens are transforming into utility tokens, yield-generating tokens, and that completely changes the investment case for those DeFi applications. And yeah, that's why I think in 2025, we will see a lot of exciting fundamental announcements. A lot of these DeFi protocols will implement something like a fee switch or any other technique to reward token holders. And that obviously will attract a lot of new investors and liquidity, which obviously benefits the entire ecosystem. So watch out for DeFi in 2025.
Just one last point to bring it home. If we look at some of the sectors that Adrian just mentioned, lending specifically, Aave, for instance, if you would to classify it or if you would to view it as a traditional lending bank, it currently ranks as the 64th largest lending bank in the world. It just reached an all-time high in terms of net deposits. It reached $34 billion. So this proves that DeFi, as Adrian said, like the technology has proved its product market fit. Now it's just a matter of finding a more convincing use case for what role does the token play within its ecosystem. And that's what we are most excited about for next year.
As I mentioned earlier, obviously we now only had time to talk about 5 predictions. In total, we included 12. And I said it at the very beginning, this space is going ballistic. Obviously, we're witnessing the birth of an entire new asset class, but at the same time, also a lot of innovation when it comes to financial infrastructure. That being said, there's so many exciting subsectors in that space. And what we did with like our 2 bonus predictions were basically highlighting 2 of those that you should watch out for in the next year. So make sure to read those and give us feedback, obviously. Now, we're coming to an end. Again, the official release date will be on Monday. So obviously, anyone who's on that call today, we would love to send you your copy directly in the beginning of next week. And if you have any questions, if you have any feedback, it would be great if you could reach out, search the dialogue with us, and we're looking forward to the next year. Now, before we jump into Q&A, and I want to open it up for questions now from the audience, but maybe let me ask the rest of the team, what's your Bitcoin price prediction for next year?
At least 150 to 107. Yeah, I think it will be somewhere from 150 to 200.
Okay.
Yeah, I'm gonna say 200K. It depends though, right? If we do see the US release their Bitcoin strategic reserve, then all these predictions are gonna get way blown out the water, and it's probably gonna be way higher than 200K. But
yeah, Max?
I'm still a little concerned about the kind of macroeconomic situation.
Give me a number.
Okay, I'll stop the chat. I'll give you 150K.
Okay. Lena?
Yeah, 175K.
All right, good. Then maybe one last question. What is the biggest risk in 2025?
I think the biggest risk is that the market is currently pricing in Trump doing all these things. Biggest risk is 1, if we just don't see that, period. And then 2, if we don't see that until 2026. So I think those are, in my opinion, 2 of the biggest risks currently. But we are seeing Trump do this as he just, it's rumored that he's going to put Paul Atkins as the head of the SEC.
Yeah.
He would fire Gary Gensler on day 1. Gary Gensler already decided to resign on day 1. And we have a very crypto-friendly person coming in as the head of the SEC. In fact, he's on the board of directors of a crypto tokenization company. So I'm just throwing that out there.
Any other risk? That's a very good one, and I totally agree with you. Maybe the market is a bit too euphoric and we're anticipating change happen too quickly, which might backfire. That's absolutely true. Any other risks that we see in the market?
Yeah, I think one risk that is basically a black swan event, but it has always happened in a bull market. I hate to be the party pooper. I'm sure you guys agree with me. The security risk that a breach happens that would shake the confidence of all of these newcomers in this market, and they would be spooked into withdrawing all their assets. So that kind of risk is also there. So that's why our role here is very important, educating people, and education now is more important than ever, especially for all these newcomers.
I think it's a double-edged sword, but Michael Saylor might have a risk here.
I agree.
He's one of the largest holders now of Bitcoin, and the amount of convertible debt that he is switching into Bitcoin might lead him to become an automatic selling pressure on the asset if the stock price of Master starts falling. It will be like the Luna to an extent of...
I actually have a counterpoint to that, though. So the way Michael Saylor has financially engineered this setup is that the amount of fees he has to pay on this debt is basically the revenue that MicroStrategy is generating from their business intelligence software. So it may seem like a huge risk, but like he's making, like their company is making a lot of money. So he's able to pay that down. So the liquidation risk, yeah, it is a real risk, but I don't think it's as crazy as people on crypto Twitter have been making it out to be, just because the company is generating a lot of money from their business intelligence software, and it's more than enough to pay down the debt that they have.
Yeah, no, it's a good counterpoint.
There's also this main character risk, right? We discussed this in the research team. Like every bull cycle, the main character is getting taken out. And obviously we saw this with 𝕂𝕠𝕕𝕖. We've seen this with SVF in the last cycle. And yeah, if someone rises to become the face and kind of the main character of the industry, it always makes me nervous. Is it a good analysis? Fundamentally, maybe not, but it's more of a sentiment-driven point.
The last thing also is the Fed just acting too late and not pushing on the brakes fast enough. I think we're already seeing this contradiction in how the speakers, like the Fed chairs, are contradicting themselves to a certain point. Some of them are very dovish, some of them are very hawkish. So it seems like there isn't really a general consensus. And if things escalate in terms of another geopolitical conflict, even though it's less likely with Trump being in power, just seeing how things played out in his last presidency, I don't think that will be the case, but it is something that we should keep in mind for sure.
Yeah, I agree with you, Kareem. I think they're different in their differences in tone from dovish and a little bit more bullish come from the fact that the market, I think it is still a bit of a turbulent market with some areas for concern. I think Adrian touched upon the risks coming from the German government a few weeks ago on an analyst call separately, but the European economy isn't completely out of the waters yet, neither is in the US. And of course, we had the news yesterday about South Korea and the martial law being activated. It doesn't seem as severe as first initially thought out, but it still is a risk in the market. And I think because equities have also been on an absolute tear throughout the whole year, we may actually be a little bit in an overpriced area potentially. And any kind of market downturn, economic downturn would potentially amplify that fact.
We're at the last stage of the bull market. Things can get overheated quite quickly. So for any investors listening, just make sure to be careful. There's a lot of opportunity, but you can burn your fingers like crazy. Wonderful. If you have any questions, obviously, we would love to answer them. We open it up for Q&A. So feel free to shoot, or if you have any prediction from your side, we would love to hear them, obviously. All right, we have some questions. Yeah, given what happened today, ETF, and what's potentially happening next year, can one still rely on historic crypto cycle patterns?
What happened today, like the huge inflows into Ethereum?
No, I think they just meant in the year
in general, ETFs now in the market. Will the cycle repeat, given that we have a bit more of an institutionalized traditional market in crypto now?
What's funny, we're seeing the cycle repeat exactly the same way that, not exactly, sorry, there's nothing ever repeats exactly the same, but it's essentially the same as last cycles. We can't predict the future. We do our research so we could try to help have a more informed prediction, but we are seeing the cycle kind of repeat as previous cycles, but who knows if that might change.
Which is mind-blowing.
Like the launch of the ETFs in January made Bitcoin reach an all-time high before the halving, but then when the halving happened, we've reverted back to the mean, and then we moved back in tandem with how the cycle should, on an average, move in the 6 to 9 months after the halving. So that's just echoing Matt's point. But of course, there will be certain things that are exogenous factors that will let Bitcoin and the market just move in an explosive direction, either up or down. But for the most part, I think there is a pattern and there is a cycle that the market will more or less act within its confines.
It's going to rhyme, but it has its unique characteristics, basically.
Exactly.
Oh, I might have been late to the party, but what are your predictions for the Bitcoin ETF?
Like we talk about this in the report, so that's why we didn't want to spoil the surprise here. But we have high expectations. I think we can say that.
No, I think we can say it. Obviously, at the moment, we looked at the global kind of like ETP, AUM in crypto-related ETPs or crypto ETPs, and we already reached like 100 billion if we look at it globally. And we believe that the institutional adoption will accelerate in 2025, and that if we look at global AUM, we expect something like 250 million in 250 billion in 2025. But that includes all the products around the world. When do you think the bull market will end?
Next year, it just depends on what happens next year. That will determine when this, like, if Trump acts too quickly on some of the promises that he made, I think the cycle will be more explosive to the upside, which will mean that it will likely fall faster around the end of it, and it will end in a shorter time. If this plays out in a more prolonged and a more balanced out manner, then I think it will survive until Q3. There will definitely be the same as all equities by March or by February. Usually by March, there's a bit of a market lull going into the summer. People step away, and then we see a reignite in interest in Q3. And then, yeah, depending on what happens throughout next year, we will see whether Q3, early Q4 is the end of it, or if it stretches a little bit beyond that. But I think next year is the fair figure to get
Yeah,
to.
yeah, and like second half of next year.
Yeah.
What about XRP and ADA, Cardano?
I would be very conservative with Ripple. Don't get too excited about it. There's a lot of speculation happening. It seems that this
Maybe let's give a recap why it pumped so hard over the last couple days or week, basically.
it had a lot of legal trouble, as some of you might be aware, with the SEC. So considering the fact that Gary Gensler is going to step down, it means that some of the lawsuits against them will probably get dropped as well. So that's one point. Another point, that XRP, they have their stable coin, the RLUSD. It doesn't really have anything unique to it compared to the existing stable coins like USDC, for instance, which Circle already has a bunch of state and federal licenses for in the US. So I don't think that will be a key differentiator. But Ripple also has a bunch of other things coming out, like a new network, a new Ethereum compatible network that's about to launch soon. But I think for the most part, it's the fact that there was some speculation that Board, one of the founders of Ripple, he sat down with Trump. It was a closed meeting or a private meeting. We don't know what happened there. And it seems like he could be advising in one way or the other. So that's one part of the speculation. The other part of the speculation, that the legal scrutiny and the black cloud of legal troubles that they've had will likely end next year. But fundamentally speaking, there is nothing that sets Ripple apart and gives it the value that it has right now, especially when you compare it to Solana, which is providing 20 times more economic value across so many different sectors, whereas Ripple, it's more about speculation.
I mean, Ripple, I think they're trying to steer around the boat right now, though. Obviously, they always envisioned, they wanted to become like the interbank chain-based system, which fundamentally speaking hasn't materialized yet. But maybe given the more regulatory clarity around Ripple, maybe about some of the fundamental changes that they want to implement, maybe they will see some traction. But obviously at the moment, the pump that we've seen is based on all of the hot news that came out. And obviously Ripple is infamous for a very strong community, which is a very important factor in the crypto space, because obviously a lot of these things are built and the foundation is to have a strong community.
And the same holds true for Cardano as well. Basically, everything we just said, exact same thing. Charles Hoskinson is talking to the Trump administration. It was declared an SEC, but it was declared a security by the SEC, but now it's not. So just those things.
Yeah.
There's another rumor also flying around. We don't want to entertain rumors, but we're just giving you guys the context. There could be some kind of a blockchain-based voting system. It will not be implemented on a federal level because that's too risky and it's too insane to be applying on that large scale. But there is apparently something around Cardano playing part in this. It could be used in small state elections, even mayor sort of elections, like at the very lowest level. So that's one of the things that came out about Cardano. Yeah.
All right. There's some question around, and if they're modeling in technical trading or real formulas, and if there is one, is it accurate? Thanks for your time. I'm not 100% sure if I understand the question correctly.
It's a follow-up question to what Matt just answered. It had to do with predictions and how we basically come up with these predictions.
Maybe again we don't give any price targets at 21 shares. When I ask about a price tag for next year, it was really just a personal opinion. However, yes, we do conduct something like technical analysis, or we do conduct valuation frameworks on top of crypto assets, something like a discounted cash flow model, which kind of gives you like a range and price. Are those models perfect? I wouldn't say so, but it clearly shows that a lot of these assets are actually valuable, or you can value them. That's what I'm trying to say. And that's what a lot of traditional investors want to see when they ask for an intrinsic value. But you've certainly talked about government reserves in BTC. I personally think that many governments will be building up reserves in BTC over the next years. And FOMO will be set up to ensure that participating countries have enough BTC on token issued in the future. That's exactly what we've been talking about. I'm sorry you're late to the party, but that's exactly what we've been discussing. We expect nation states to adopt Bitcoin in 2025, and that it will kick off this global game theory where a lot of other nations will follow suit. Yeah, there was one more question about valuation. Feel free to reach out to us directly. We can showcase some of the work that we've been done when it comes to valuating cryptos and applying the different models.
But to sum it up, it's a combination of on-chain indicators, it's a combination of financial valuations, and it's a combination of Fibonacci retracements, Bitcoin's 4-year cycle indicator. And that's why we give ranges, because we don't have a magic ball, but it just gives you an adequate range of where you can expect things to be. And again, it depends on how you want to value this network. Some of these networks are not just one thing or the other. You can view it from either a capital generating asset, or you can look at it as in terms of a consumable asset. So it depends on how you're seeing a certain thing. But we
different assets, different approach.
Yeah, and we have reports for this as well. So yeah, please do feel free to reach out, and we'll be happy to share some of this stuff back with you.
All right. I think that's it. Thank you very much. Thank you, team, for supporting in this wonderful session. We wish you an amazing rest of the year. Please make sure we're going to send you a copy of the State of Crypto. Again, feel free to reach out with any feedback. But other than that, I think it's a fantastic read for the Christmas time to create and get some enthusiasm going into 2025. But yeah, no, other than that, thank you, team. Thank you for everyone that tuned in. And yeah, a good rest of the year. Stay healthy. Merry Christmas and happy 2025.
Happy holidays, guys.
Thank you.